if you guys have some money sitting on the sidelines and you're wondering what to do with it because it seems to be getting hit from inflation, or the stock market is dropping off and you're uncertain about that, crypto is getting crushed. Multifamily real estate is one of the most resilient asset classes in any stage of the market, and you can invest alongside the pros. Just go to nighthawkequity.com. Myself, Drew, and Michael are the partners over there. We have over 300 million in assets that we own and operate currently in the Southeast, and we would love to chat with you. So just go to nighthawkequity.com, click the Join the Investor Club button, and set up a call with David. We'd love to chat with you a bit about what we have going on and talk about some interesting opportunities that we see on the horizons. Want to give a shout out to Brandon Howlett on YouTube. He said, great content, the most in-depth insight on apartment building investing I've seen online. Thanks so much, Brandon. If you guys want to give a shout out, go comment, like, subscribe on our YouTube, and we may just shout you out on this podcast. So before we get into the actual show, I wanted to chat a little bit about what's happening in the marketplace and some of the things that we're seeing on our end. So let's just say inflation's at an all-time high. Interest rates are skyrocketing. They just raised interest rates by another 75 bips. They'll probably do it again very soon. And we're seeing a surplus of supply hitting the market. Just deals are unloading because there's investors that are scared. They have variable interest rates and they're afraid it's going to go up and erode into the equity that's been built. So you're seeing just this crazy amount of deals hitting the market. On top of it, people don't really know how to underwrite right now because they don't know the true impact of the inflation and the interest rates in combination. And what I'll say is that while the interest rate situation is not amazing, the inflation is still much stronger than the interest rates rising. And so now is the time, if you are an owner, operator, multifamily, to really capitalize your operations and take advantage of this inflation. If you're not renewing at 8%, you need to start to help build in that extra padding. And I think that in this environment, it's just always err on the side of caution. When you're just make sure you have ample cash, you're building up those cash reserves, and you're watching how your interest rates are being affected. Luckily, in the commercial side, especially if you have a variable interest rate loan and you're going on SOFR, SOFR is that it doesn't move in tandem specifically with the rate hike. So if your things are going up by 75 bips, so it doesn't mean SOFR goes up by 75 bips. It means it will get affected. It will likely rise, but it's not going to be as drastic as some other things out there like residential loans. So it's still not a bad place to be in commercial real estate, especially multifamily. We can still take advantage of the rising inflation and just be cautious of the rising interest rates, of course, and still hunting for deals out there in the market as they come through. Make sure that if you are going after a deal, that go with a lender that you have a relationship with. Especially right now, it's super important because you don't want to get retraded at the end. And somebody that you already have a relationship with is likely not going to do that. So hearing horror stories out there of new relationships, people trying to build lender relationships in the first go round in this environment, and they're getting retraded at closing, and it's causing problems for them in purchasing your first real estate deal, or just taking yourself to the next level in real estate by going to themichaelblanc.com/mentor. So if you guys want to hear out more about that, go to themichaelblanc.com/mentor and check out what we have going on there. It's really interesting and very exciting. You get to partner up with somebody that's done it before. They're not doing this for the money. They're doing it because they want to help. They're experienced operators in the business, and you can learn from them in order to get your first deal done. With that said, guys, thanks so much for tuning in. We'll catch you guys next time.